Prices of wholesale goods and services in the U.S. stayed flat in June. The producer price index was unchanged from May, with the annual wholesale inflation slowing to 2.3%. Now, this may sound like good news, but of course there is a catch. A sharp fall in the cost of travel-related services is masking a rise in the price of actual goods. That means producers are paying more for the stuff they make and raising the prices of manufactured goods. Economists are predicting inflation will slowly pick up as companies attempt to pass along those higher trade costs to you, the consumer. Now, for more insight into the state of the U.S. economy, let's turn to Brian Bethune, who is an economics professor at Boston College. Brian, welcome to the show. Thanks for chatting with us. We appreciate it.
It's great to be on your show this evening.
Now, if you listen to economists, it's here. Trump's love affair with tariffs have spilled over and now becoming a drag on consumer prices. But wholesale prices are also being affected by tariffs. What's your take on all of this latest inflation data?
Well, my take is that I wasn't expecting to see any pass-through of the tariffs until June. And this is the first month where we're starting to see it. But when you look at the very detailed categories, you have to look at specifically those products, and these are goods. You have to look at the goods that are being affected by the tariffs. And so when you look at those specifically, things like toys, appliances, coffee, carbonated beverages, we are definitely seeing the tariffs feeding through to higher prices. So
now,
that's,
I'm sorry, go ahead.
That's now pretty much in the numbers, as it were. It's fairly obvious. What we're seeing, however, is some offsets. So there's offsets mainly in energy prices. So we've had several months of declines in energy prices, and that's kind of masked or buffered the impact of the tariffs on the overall price level. So we got lucky with the crude oil prices coming down.
Okay. And now, to pick up on what you're talking about, it does seem that the signs are everywhere. And as you mentioned, people are watching their wallets and spending less. Even with these reduced fuel prices, people are spending a lot less on travel. So how are Trump's tariffs expected to further impact inflation in the coming months? That's what everybody's worried about.
Yes, I think it's pretty much, it's going to happen. I think what we've seen so far actually is corporations are being very cautious about passing on the price increases, mainly because the tariffs have been jumping up and down. We don't know where they're going to land eventually. So what corporations are doing is very gently raising prices. In some sense, they're shielding their customers from the noise and waiting until the dust settles before they make a determination as to what is the appropriate price to pay, to charge. So corporations are buffering some of this impact until they can see what is the tariff level going to be from what country on what product. And we still don't have an answer to that question.
Yeah, and Brian, I heard one late night commentator say that Trump has basically been pulling Jedi mind tricks on the American people. There is no inflation, and they just kind of go along in their business. And that kind of lends itself to what you're talking about, companies basically trying to shield the consumer. So what does this latest consumer and wholesale information suggest about how Americans are coping with stubborn inflation and tariff-related price spikes?
Yeah, I think they're under pressure. I think households are under pressure, and particularly of the low-income households. In other words, households that have less discretionary spending available. They are really caught in a bind here. They have no choice but to buy some of these products. And we were talking now some basic products: coffee, carbonated beverages. I mean, these are things that people buy every week at the grocery store. So that the share of their income that goes to basic necessities like groceries and other things is higher than the upper income people. So they're definitely feeling the squeeze.
And you talk about the people on the lower economic rung. And as we mentioned earlier in our program, they're also losing the safety net in many ways. So in light of the new tariffs, the global tensions, talk a little bit more about the sectors that are vulnerable to further price increases beyond carbonated beverages, things like that, because it's fruits, it's vegetables, it's meat, it's eggs, it's everything.
Well, I think in some sense, like I said, we've had the benefit of the lower crude oil and diesel fuel prices, which basically means that that's a break we've got. It's like a tax break over the past 3 months, but that's basically ended. So now more of the underlying cost pressures will become evident, and it will become a significant problem. It's going to be a problem for consumers. It's going to be a problem for corporations in terms of how they manage the cost pressures that they're seeing. And it's going to be a problem for the Federal Reserve, too, in terms of setting interest rates. So it really is a difficult environment all around for everybody concerned.
Yeah, let's pick up on that because the White House, Trump, has been leaning on Jerome Powell, the head of the Fed, to trim interest rates, and the Fed has pushed back, saying it needs to see certain data before it makes any move forward. Talk about how this standoff could dramatically affect inflation at some point.
Well, I think this is a situation which is really unprecedented in any history, at least modern history, that you see this kind of assault on the Federal Reserve Chairman. What we're looking at right now in the U.S. economy is really, we're still at full employment.
Yeah.
We're at 4.2% unemployment, and core inflation is at 2.9%. So if you look at the inflation target for the Fed, we're 0.9 percentage points away from their target at full employment. I mean, that means the Fed can't do anything. It can't cut interest rates in that configuration of economic realities. So the pressure that's mounting from the president is really, I think, in some sense, going to create a lot of credibility problems. The more pressure he puts on the chair, the more, I think, frustrated the president is going to get, because there's no legal or constitutional means to try to displace the Fed chair. That's why they're appointed.
Right, and he's there until May of 2026. Brian Bethune, we certainly appreciate your insight. Thank you so much.
All right. Have a good evening.
You too.
Thank you.